Turnaround Tuesday. How's everyone doing today? Last week of illiquid markets. Everyone doing all right? Okay, so gold reversed, and it looked to me like silver was incomplete, and it could be completing here. So here we are trading up around the 1790-ish area with the gold-silver ratio. I guess you could say it's breaking down. I suspect it a little bit here, back at this support level. Pretty ugly, nothing on the RSI. Here's your daily. So we just did it. Okay, so we took out this low after this bounce. Of course, we could continue to accelerate. That's the way it looks right here. We're accelerating. I think that there's a shot here. The easier short, of course, would be something that's not making a new high, which is gold, right? I'm taking a shot that the gold-silver ratio is overdone here short term. So we'll see. The euro pound is continuing that breakdown held in EG, and we're making new lows for the move here. So this breakdown that we had right here with a little test, got through it a little bit, and now it looks like we're on our way to take out the 90 level. 89.5 to 89 are objectives on this trade, just based upon this formation. Just an update on it. It's senior citizens trade since volatility has calmed down in this pair, but looking for maybe here. See what kind of weekly off number we have. Yeah. Should close over 91.30 for the week, and having some about to break through this 50-day moving average, and the 200 comes in all the way down here. If I did a fib here, let's just take a look, because I know some people are trading this one. In fact, one of the best macro traders I've ever met, Stelios Kontos, is in on this trade based upon what he sees. I think a lot of his big calls or macro calls are made based a lot on fundamentals. So see what we have technically here for some type of retrace, because it's still a bull market. Okay, so this 89.12 is halfway back. Maybe it does get down to 88.14. So this is counter trend. I don't think it's the end of this move to the upside. Just a pullback. Was looking for 94, but look at this. That's pretty good for a weekly reading up there. 76. Remove this. Daily had a little bit of divergence, but not ideal when it's over 70. Oil, I still think this is a descending triangle, but bears, you don't want to be short if we get back above these moving averages that we failed from last week, and that's a $56 level. If that happens, I think then we're going to get a breakout over 58 and shake out everyone and rally to 61. I'd be paying close attention to that. With yields, I can't get short yields here. I know a lot of people are saying we're due for a wave 4 bounce, so I think we could get that. And I know even 185 is a possibility there. So with that happening, you would think that the yen isn't going to fail, and we'll see if we hold the key reversal. Short term, though, when you look at the yen, there was no divergence here, right? Same with the dollar. So the dollar actually, failed from right back to this major support before it started to accelerate to the downside Friday. But even if it's good, you would expect some type of pullback, 97.60. But definitely the leader here. Until EG bottoms, what's your preferred long between euro and pound? Oh, hi, Sinatra. Oh, if you're bearish euro pound for a while, what do you want to buy when you think the dollar could come off, the euro or the pound? Okay. And I know a lot of people were talking about the potential of the pound getting up to 123. Well, we're headed there. And you know what we have? It shows up better here. How about 1, 2, and then a 3 up here at major resistance at, the ForexAnalytix team was talking about down here. Blake, Steve, all the guys. Oh, we're going to have Andre with us, so we're going to get some harmonic looks. Always like to see what Andre's thinking about, what kind of harmonic patterns he has. And I just want to remind everyone that this webinar is being moderated and presenters are from ForexAnalytix, but our sponsor is Forest Park FX, where you can earn rebates from what you're doing trading wise. And I do challenge you, and please let me know if you find a stronger team than this anywhere on the net. Okay. Pretty strong line up there, don't you think? Yeah. Okay, Ben thinks that shorts need to be squeezed. Okay, so still plenty of shorts in the pound. So yeah, maybe 123 is enough. I would be coming out of euro pound shorts when the pound gets up to 23. See what happens. So chart wise, I'm sure that the rest of the crew have some ideas here. And we have, if you're a precious metal head, I'm bringing back Dan Popescu, and last time he was here, Steve said, God, we should bring that guy back more often. So if you like precious metals and monetary stuff about the dollar, and he even has views on Bitcoin, but he's a precious metal aficionado. So should be a great interview at the top of the hour, and we'll get Dan's current view. All of these trades that I'm talking about in precious metals are counter trend as well. So a lot of stuff I do is counter trend. So we'll see what happens here. What's the silver doing now? Still pumping away at 96, trying to blow out some of the divergence. I'm down a dime. I go in on partials. We'll see what happens. See if I get blown out in the next couple of days. The S&Ps, and then I'm going to turn it over to Blake. I've read, and I got some of Jim's stuff. He was on vacation, but the quote that President Trump talked about China wanting a deal was not a telephone conversation, but just something that came up on the wire. So, you're going to know by the yuan, and it does look like the yuan's trying to come off a bit here. See this? So if we can fill this gap, maybe there's something going on, but that's still a breakaway gap to my eye and tough to pick. It's enough that I'm, letting the ice crack here in silver, but I do think even silver eventually, you see this gap here, this will really be your first, if you want to wait for technical confirmation, this would be what I call an exhaustion gap, or it's a breakaway gap and we're just going to smoke. But if we come back and fill this gap, I think there's a lot of downside in silver, which is pretty contrary, and gold too. Why not in gold over the next several months, shake out the 90% bulls and take it back down towards the breakout area. I have a couple levels here. I think by this fall, from a lot of the cycle work that I follow from different guys that, I do my intelligence gathering with, November, December for some type of low here in the gold, and why can't it retrace even just to shake out all the breakout buyers to 13 and a quarter and then go to 2000? So these are counter trend trades in the precious metals, just like EG. And you know what? In your journal, it'd be a good idea if you write down if your trades are with the trend or counter trend, and then look back and see what's your style. And you might be a better trend follower than kind of a reversal type trader. So check it out, and when you're journaling, label what kind of trade it is, counter trend. And as Blake has said, when he's just counter trend trading, it's smaller and your expectations aren't as large as they are when you're going with the trend. So it's more of a scalping mentality than a position mentality. Okay, so Blake, how are you today, man?
Hey, good morning, Coach.
Hey, what's happening with you?
Nothing much. You were talking about silver, and I actually just sent out an update for ForexAnalytix regarding silver, as you were talking about it. So I'll show you what I was talking about.
Cool.
Yeah, silver should be going to 30 in the next 20 minutes or so. Joking. I'm joking. I'm totally joking.
That's okay. I'd be out.
No. I'm totally joking. But But silver, you'll notice this is the. Oops. Let me move this.
Oh, you had a measured move there.
Measured move of the triangle should cap us pretty close to where we're at. We might probe some stops above 18.
Yeah, big round number. Yeah.
But yeah, I mean, I think that's doable. But the DSI for silver today is at 85, I think. So it's pretty far up there, and we're a little extended, divergent. So I wouldn't be surprised if silver stops up here. I was looking at it last night, thinking, man, I don't think it's going much higher. And then I got up this morning and watching the silver explode, going, well, I'm glad I didn't try to act on that, because
there is kind of like a fundamental rationale for it too. So if we have this narrative about global slowing, silver being more of an industrial metal, like used for electricity and so forth, not photography anymore, but it has so many industrial uses that it would be more sensitive to global GDP growth slowing down more than gold would.
Yeah, well, we definitely could see a little bit of a reversal in the silver gold ratio.
You see it. It just made a new low.
Oh, okay. Yeah, so you might get a little reversal off of that. I still think gold is probably the better option at these levels if you want to be on the long side or something.
Oh, okay, long side.
Yeah, but at the same time, I look at gold and it's up against key resistance here. Anybody that's been trying to stand in the way of gold has had some serious problems recently. So, but we'll see if these precious metals can pull back a little bit. But other than that, the one thing that's on my mind this morning, Coach, is the cable, and the cable is up against channel resistance. Now, I was just talking to the guys in my office, and for those of you that don't know, I trade for FX Macro on Twitter. I trade, for Gelos. I've been trading for them for years, and we were just talking about the cable, and I was like, there's some positive comments out of the EU. He's like, well, you have to expect that there's going to be some positive comments out of the EU, because no one wants to be that one person that causes the Brexit. Like they don't want to be that. You don't want to be that guy, right? That guy that
the bill.
Yeah, but the cable is at risk, I think, of a squeeze. We just because it seems to me that there's nothing that's going to stop Brexit from happening. I mean, unless the EU actually has some sort of they can figure out a deal, or we get Parliament doesn't allow for Brexit to happen.
I think he's talked about trying to close Parliament for 5 days around Brexit.
Probably.
Yeah.
Yeah. So, I mean, but the thing is, unless there is some significant news, it's hard to be bullish the cable, like looking at the pound and going, oh, the pound's going back to 140 right now. But I do think it is capable of squeezing here. And that's exactly what's happening right now, is we're seeing a squeeze higher in the pound. And there are going to be these areas where there's, possible price deficiencies where you're gonna be able to trade through. So for example, if we break through 123, I think we can go to 123, 123.80 pretty quick. That's 100 pips away from here.
Yeah.
And that will just take us down to the breakdown point. And remember, the market is short cable, so for it to squeeze higher like that shouldn't be surprising. And it is entirely possible that could happen. And I was just long a little bit. I took it off at 122.70 something, 73, I think. But it actually, the pound looks like we're going to squeeze higher here. Maybe Stelios has something to say about the pound's rise this morning. Good morning, Stel.
Good morning.
Stel.
How are you doing?
I'm very well, thank you. Still very warm here, so I'm not complaining. You are absolutely right about the pound. It went up on the back of these comments. Actually, again, it's these sources. It's not a named person who said that there's been progress made, and Boris Johnson is actually proposing some alternatives which are being met with positivity from the European side. But as long as it's not something official, I don't buy it yet, although I like it because people know I am short Euro pound, and I'm also long a little bit of a sterling Kiwi. But I've said before, Boris Johnson, very different proposition to Theresa May. And in my opinion, if there is going to be some kind of deal done, he probably has the best chances of getting it done. Having said that, as I said before, if it's not official, I take it with a pinch of salt, and until something real is happening. So that's my view on the pound. Actually, talking about Euro pound, we need to mention one more thing. On the Euro side, it's we have Italy with their own political problems, and from what I read, the Five-Star Movement, together with the Democratic Party, so this is not the Lega Nord, the far-right party. This is the Five-Star Movement, which is more leftist, and it's in current coalition with the Lega Nord. They have been asked by the president to form a coalition, and although it seemed like they were going to be able to make things work, the initial signs are not good. So it looks like, and we're running out of time. I think they have one more day to get a coalition done. If they don't get that, then the Lega Nord party will have a chance. And although they don't have that many allies, I think it would be negative for the euro to see this possibility of the Five-Star with a Democratic Party actually forming a government. I think it's going to be negative for the euro for sure. So and this is going to happen within the next day or so.
Is Italy the next shoe to drop?
I don't know, but it's a problem, and we said it from day one, from when this government was formed, a far right party and a leftist party. It's very atypical, let's say, and we said it's going to be unpredictable. And look, 1 year later, it's already we already have trouble, and uncertainty is the enemy always. So what's going to happen, I don't know, but Italy is a huge country. You have to remember that, huge economy, huge debt.
Right. So, it's not like we're dealing with Greece.
No. Forget about damn Greeks. They're okay now.
Hey, I'm just happy you guys have capital controls lifted. This is great. We can see the Greeks coming by the stuff now.
In Scottsdale, real estate, yeah.
Yeah, exactly. Come pick up some Scottsdale real estate. Great. So what else do we have going on this morning, Stelios? It's been a pretty quiet night, so.
Yeah, it's been quiet. We haven't had anything from Trump, surprisingly. We had German GDP confirmed at minus 0.1%, so negative territory, and if we get one more reading, then Germany's in technical recession. So this is not good. We're kind of expecting it, though. It's Germany hasn't been doing that well over the past few months, and but that's it, really. We don't have anything else to note this morning. It's been pretty quiet.
From data, do we have any data that's coming out today that we should talk about?
We just have consumer confidence in the US,
okay. which is not going to happen while we're on. Now,
no.
One of the things I want to talk a little bit about this morning is, we're coming into the end of the month, and it's the end of August, and if you look at the S&Ps, I have to point out the fact that the S&P is still holding up. The market, I remember we were a little worried when we dipped to this 200-day moving average a couple weeks ago. And one of the things that I mentioned to you guys is don't get too bearish down here, because we're probably going to bounce around the remainder of August. And then we'll probably, if we're going to sell off, it's going to be into the fall. And that's what's transpired this month, is we're just kind of staying sideways in risk. And, if you think about like the sell-off that we had on Friday and then the reversal yesterday, and here we're at the 618, and just currently we're at the 618 in the S&P. If we break through these levels, I mean, there's a good chance that we're probably going to get back above 2,900 and back towards 2,920, 2,940. I don't think this is a bullish sign for stocks right at this moment in time. What I'm trying to point out is that we are range bound, and that if we're going into the end of the month, and you're gonna see a lot of institutions marking up their books going into the end of the month. We're probably gonna continue to stay range bound. So therefore, you're talking today. You've got to think that today stocks could continue higher. And the reason why I'm bringing this up is because I want to bring to your attention a couple things that could happen if stocks go higher. So if stocks move higher, my natural inclination is going to be, let's look at the bond market first and foremost. Now, if you look at the bond market, you'll notice here's the 10-year. Okay. The 10-year, we're in this upward sloping channel, very divergent relative strength. I still think bonds are strong, but I think the risk is starting to build that the bond market could pull back a little bit. I wouldn't get too entirely excited about the bond market pulling back, but if stocks do continue higher, that means yields are probably going up. So if yields are going up, that means bonds are coming down. Now, it may not just be, the 10-year. Let's take a look at Boons. The Boons are in a bullish. This is a bullish flag pennant, right? We made a false breakout yesterday, but Boons could pull back, and it doesn't mean that the Boon market is completely reversing. Actually, quite contrary in my belief is Boons are probably going to go back down like this and then reverse to new highs. So if I had to just guess what Boons are going to do, just kind of think about it. That's what I think Boons are going to do. They're going to pull back a little bit, but why would they do that? Well, if you look at equities and you think about the S&P, being in a range, and like, let's imagine the S&P is basically just stuck in this 2,800 roughly to 2,950 range. Let's just imagine that. And we're mid-range right now, but we could be at the upper end of the range, right? So if that happens, then you have to look at our chart of the day yesterday. You have the DAX, right? So imagine Boons go down, stocks go up. Generally speaking, we have risk appetite building, stocks moving higher, S&P moving higher, German DAX, we have this big inverted head and shoulder pattern, right? That's a pretty one, isn't it, Stellius? How often do you see a inverted head and shoulder pattern like look so
it's so
pretty
symmetrical. I like it. Yeah, symmetrical.
Yeah,
I
mean, if it broke the 11,857 is the number I was looking at, but if it breaks 11,860, that's a perfect symmetrical triangle. They don't often work out that way, but sometimes they do, and when they do, it's nice. But like I said, I'm trying to build the case that stocks might move a little higher. The DAX might rally to 12,200 again. You got bonds and boons that may pull back, yields go up, right? And that would mean, like, look at the 10-year yield, yield, and this a little messy here, but let's just say that the 10-year yields bounce back to like 170 or something. Nothing big, nothing changing the overall trend of yields, but nothing goes straight up or straight down. So, for us to bounce back to like 170 would be logical. But then as FX traders, what does that do for us? Well, that's when I start looking at some of these yen pairs, right? So start off with the dollar yen. These are charts that are very important to, look at stocks are just flying. I think everybody's listening to this webinar right now because the S&P just ripped. Here's the S&P. It's a 15-minute chart, but actually I'll put it on a 5-minute chart. You can see the S&P just blew into new highs. But what does that do to the yen pairs? So you got, let's take a quick look at the yen pairs. The dollar yen hit a new 2019 low Sunday and reversed, right? Euro yen hit a new 2019 low, and then we reverse. Look, we're at channel resistance. We break in the euro yen, we break through 118.20. It's going to scream higher. Here's the pound yen. If you think the pound yen could squeeze, we break back above this 130.60 level. This thing is going to squeeze. Now, again, I'm just trying to outline the idea of, let's just imagine stocks go up. Oh my God, they are ripping right now. Look at the S&P right now. Here's a 1-minute chart.
Yeah, I don't see any statements or any.
It's a squeeze. We just squeezed through the 618, right?
Yeah.
So, we're just squeezing here. It's all it is just a technical squeeze. I mean, but no news. I don't see any news. I'm looking. Here's my here's some news coming through. There's no news. It's just those are all the headlines, major headlines coming through. Here's my red headlines that are coming through. Nothing. So this is just a technical squeeze. But what the case I'm trying to build here is, like, you take a look at the pound yen. Pound yen did not make lower lows. Aussie yen hit a new 2019 low and reversed. So now you got a false breakdown there. New Zealand yen, same thing. We hit a new 2019 low, false breakdown. Canadian yen, false breakdown, not a new 2019 low. These are all of these yen pairs are primed to move higher. And if stocks continue to move higher, S&P moves higher, bonds are going to pull back a little bit. Yields are going to go up. We have the makeup right now for this all to happen. So, does it make sense, everybody? Everybody with me?
Yep.
All right, just making sure. But the good news is I'm not the only person that's going to come in and talk to you about some of this stuff today. We're going to bring Andre, but I'll bring Andre in about 5 minutes or so. The news that's coming out, the consumer confidence number, is not for it's not for a little bit.
Andre needs to go to Twitter and look at Ziggy's cartoon that he's coming in today, talking about harmonics. Shows him with a harmonica.
Oh, that's so funny.
Nice. I saw that. That's really good.
That's cute.
Nice, Ziggy.
Very, very well done, Ziggy. Well, the thing is I noticed Andre. For those of you that are using ForexAnalytix, Andre put in a new pattern in play in the euro yen. or no, euro dollar. Yes, and so that one just popped up, and it looks like Bitcoin too. So he's looking at some reversals here. I love it when Andre starts to get active, because I know he's, as a harmonic trader, he's probably looking of a reversal of a more recent trend. Because typically harmonics and LA wave patterns, they tend to find near-term reversals of maybe something that was happening over the last few days or maybe a week. So that means he might have some really interesting charts brewing here in a few minutes. But I want to just make sure that everybody's kind of on the same page and understanding why I'm thinking that stocks might continue higher here in the near term, because again, when you have a range bound activity, you have yields that look like they could bounce. We're going into the end of the month. Oh wow, look at gold. Gold just took this might actually work out for you there, Coach.
Yeah, well, broken clocks, bro.
Hey, yeah, if you can be wrong, twice a day, you're good,
Yeah.
right?
All right.
As long as you have good risk reward.
Yeah. That's the key.
Now, one of the things that I want to see here is I want to see, because I am long some of the yen pairs. That means I'm short yen. All right. I'm long some euro yen. I'm actually long a little dollar yen. I'm long some euro dollar as well. I'm a little overweight, that stuff. But what I really want to see is I want to see these precious metals reverse, because if you look, let's see if I can do this. XAU USD. I'm gonna pull it up
Yen
on a
and
separate
precious
chart.
metals.
Yeah, so I'm gonna take this here. This is gold, right? And
Yeah.
let me clean this up. I don't want anything on this chart other than these moving averages. Is fine. Now I'm gonna go ahead and compare that to the 6J. Here's the yen futures. Okay, and you can see the strong correlation between gold and yen. So if you're trading yen like I am, I'm actually short yen. That means I think that the dollar yen's going up, the euro yen's going up, yada yada yada.
Right.
If I think that's happening, then I do want precious metals to come down. I want gold to come down. I want silver to come down, because that means that the yen will probably, the yen will come down with it, which means that the yen pairs will move up. And that's generally speaking, that's what I'm looking for at this moment, at least for the next, day or two. And just so you guys know, I just want you all to know, I'm not in the camp of, and let me get rid of this really quick. I am not in the camp that the euro yen, or let's say the dollar yen is a better example. I'm not in the camp to say that the dollar yen's heading back to 110. I think that the dollar yen can make it back to 107, maybe 107.50. All right. I think that's where it's going. And I think ultimately the dollar yen is going lower. I just think that over the next day or two, it could, make its way higher, is what I'm thinking. So, hey, before I hand it over to Andre here in the next 10 minutes or so, is there any questions, Coach, that you see coming in from folks? I just want to make sure that there's no comments.
We've had some comments. Someone would like to see GU get to 125, 127, $47. Someone's going to sell their physical silver. I shouldn't laugh. It could go there. I know.
I'm actually very bullish precious metals.
Yeah.
I about a year ago, and I don't.
Yeah, you were buying gold a year ago.
I bought
physical.
Gold. I bought physical gold at when it was trading at 1280. So
yeah,
nice. I went and I cashed in a bunch of dollars and I bought physical gold. It's all in my safe, And I bought a lot of silver too. And I bought silver when it was at right
14.
around here, like maybe 1550 or so,
Yeah.
somewhere around here. I own physical metals right now, and I'm not selling all the physical stuff. I'm holding on to it. I actually do agree that I think silver over time is going a lot higher. I think it's probably going to trade back up towards 20, 25, maybe even higher than that. But I own physical metals, but that doesn't mean that I won't trade it, you know, long or short on futures, you know, from time to time. And I do think these metals have had a great run. And I wouldn't be surprised to see silver back at 17. You know, I wouldn't be surprised to see gold, you know, back at 1480. Believe me, if we get back to, you know, 17 or 1650 on silver and you know, gold makes it back to 1450, 1480, I'll be long. I'll look to buy those dips. So, you know, I just think that, you know, near term, you know, we're talking here within the, you know, last couple of days, or the you know, the next couple of days, I think near term we have an opportunity for them to pull back a little bit, and I'm hoping for that, because frankly I just would like to establish bigger longs. So yeah. Oh, one last thing I wanted to go over before you guys go. One of the best risk barometers right now, in my view, is the Euro Mexican peso. So if you guys think that stocks are going higher, okay, you have to look at the Euro Mexican peso as coming down. And I think that the Euro Mexican, and I'm talking from an intraday basis, I think the Euro Mexican peso is one of those currencies that, as it goes down intraday, that's telling us that stocks will be going higher. If it starts ticking higher, that's an indication that we're going to start to see stocks moving lower. So just use the Euro Mexican peso. I have been trading it quite frequently the last couple of weeks, but this is a chart that I think that you have to pay attention to for risk appetite and risk aversion moving forward. And I think that's something that that I think you should keep on your screen. I keep it on my screen, and I'm constantly looking at it throughout the course of the day to help me be on the right side of risk. Now, with that being said, I don't want to take up all of the rest of the hour, because I have we want to bring in Andre, who has been so kind to join us today. Andre, are you here?
Yes, I am. Hello,
Andre,
everyone.
how are you doing this morning?
I'm fine. Thank you very much. And
All
you?
right. So, you know, I was looking at some of your work, and I realized that you're starting to look at some potential reversals here. How's the market look to you?
Specifically for pound pairs and for some of the yen pairs too. So yes, we have a few of them. Let me try to, if I can push the screen.
Yep, I'm going to stop sharing, and you should be able to grab it from here. Now, for those of you that don't know, you know, Andre is got some of the most beautiful charts on I was going to say this side of the Mississippi, but that doesn't make sense because he's in Europe. But he draws some of the most beautiful harmonic patterns, and that's one thing that I really appreciate about Andre, especially being on our team, is that I get to see him. But B, seeing a harmonic pattern or an Elliott wave pattern in Gregor Horvat's, you know, from his point of view, I think takes a special skill, and it's something that I don't possess. And so I always appreciate when people like Andre have the eye, and he can see things before I can see it, or see things that I don't see. And then I get to see him with ForexAnalytix. And so if you guys use ForexAnalytix, make sure you click on, you know, when you're looking at the active ticker screen, make sure you click on the H indicators on all the instruments, because this way you get to see Andre's charts and read his commentary. So Andre, what do you got brewing for us?
Thank you very much, Blake, for the introduction and the presentation. Actually, it's a pleasure being here and sharing my content and my views. with our community. It's always great to share and to learn with that, because we learn a lot sharing and making other people happy with our views. So that's the objective. Thank you very much. So yes, as you said before, I have a few reversal patterns for cable or for pound related pairs and for some of the yen. But let me show you also those metals, because you have also mentioned those potential reversals. So this is an extreme vision for a deeper pullback on gold. This is a weekly time frame chart, and basically we have no reason and we have no motive basically on or based on a weekly time frame. We have no bearish divergence at this point. I also think there's room to trade above, but let me try to go into a daily time frame now, because there we have a clear bearish divergence, as mentioned by Dale, but we have also the potential false breakout above. And if that confirms to be the case, if that happens, if this is the false breakout, obviously we need to violate these previous structural lows. But if that happens, I see potential for some of the patterns, some patterns that may guide into a more downside momentum. So first of all, the bullish shark pattern at 1618 extension, it's now projected at the weekly fractal resistance. So this was the previous resistance level. And if the market sinks into those levels, this is the 1618. Actually, this is a measurement from these highs to these lows there. So an extension below at 1618 extension and preceded by this false breakout, that will print a shark pattern. So that means the shark pattern requires a false breakout around 113 extension, and then the market needs to sink into the 1618 extension. If that happens, the market needs to pull back, but then it needs to provide a short opportunity. Basically, we will search for a symmetrical ABCD pattern or something similar. That will put the price, and this is a game of, let's say, expectations and probabilities. If something happens, then we can start to make some assumptions. At this point, based on a weekly time frame, I still believe there's room to trade above, but if this confirms as being as a false breakout, the market needs to sink, needs to break the daily fractal support there. That will print the shark at 1618 extension. It needs to pull back and provide a short. The shark at 224 extension inside or retesting this channel, this broken channel during all this period, a retest of that channel, and then we need to wait for the development, because if the market decides to pull back from the 224 extension, two things can happen. One of them, the market will rally into previous highs and keep trading higher, or it will be rejected at previous structure support levels, and it can print as one eventual right shoulder, which will put the price trading below or close to the monthly resistance. So this is my extreme vision of a bearish or my extreme bearish scenario for gold. Silver, a little bit different. We are now, well, let me go into 12 hours time frame chart. Let me reduce my time frame a little bit. So as we can see, also trading above these. Are you there, Dale? I can
yes,
hear
buddy.
you.
Yeah.
Okay, if you need to interrupt
You hearing me
please.
breathe? Huh?
Yes, I do. Like Darth Vader.
Oh,
similar.
okay. All right. I'll
No
mute.
problem. We love Star Wars.
Okay. All right.
So on silver, as mentioned by Blake, we see the we see silver squeezing higher at this point. I will not be surprised to see a similar behavior as the previous one, and that may put silver trading. Actually, let me put the things like this. We may see silver printing, and Dale, again, eventually we are now fading the potential bearish divergence for the potential.
Oh, it's okay, buddy. Look, you know what? It's great that you have a differing view. It's all right. That's just another trade for me.
No, not for that reason. But I'm just about to ask you about the potential third drive.
Yeah, it's a cleaner looking one in gold, but yeah, it could be a 3.
Yeah, it can be.
Sometimes 3s turn into 6, 4 or 5.
Of course, and 1 will become 3 or 4.
But they have to turn it soon. I don't know if they get up towards your upper numbers. Probably blows out the divergence. It's threatening to do it now.
Yes, eventually that will happen. And let me just push my gold chart, and because I forgot to mention this, because I also shared that view previously with you, and I will not be surprised to see that pattern printed above. So we have all the Fibonacci ratios in place at this point, but of course it requires a lot of time to complete. But I will not be surprised to see gold trading higher and completing this bearish bat pattern above. Again, as mentioned before, I will not be surprised with the pullback, retesting the monthly fractal, and then the resume that may offer some bullish opportunities there, of course. On silver, I don't have a similar pattern for an higher, let's say, for a weekly time frame, and on the same proportion, but eventually we can see the silver approaching also. Let me push this price. 78% retracement, 88% retracement between 1961, 2032. At some point, the market is now breaking all that structure. I will not be surprised to see silver finding some resistance and pressure at very close to those previous highs. But there's no clear pattern for silver projected there. German DAX, I believe I shared this among our community already. This is a daily time frame chart. We have this green alt bat pattern printed at 113 extension. The market is now printing or forming these eventual, the eventual inverted edge and shoulders mentioned by Blake. And the Fibonacci ratios presented if the market violates this daily fractal resistance, suggesting more upside momentum for the pair. This is a default projection for the inverted edge and shoulders that will put the price trading at 200% Fibonacci extension, 1219, and right above at 161 extension from this very last swing, the shark pattern for the potential pullback at 1221. So 2 points above, we have the shark pattern projected at 168 extension. This is also previous structure support level. So I will not be surprised to see DAX breaking above the next zone, validating the inverted edge and shoulders, searching for the default projections for the pattern, and then the 50% retracement fall required for the shark pattern, which may also eventually trade even lower. We don't know what will happen from there, but default targets position at that 50% retracement if the market decides to form the pattern. Note that the pattern is not validated yet. It can fail, and if that happens, well, we will see where it will find support. I was expecting support for DAX above these highs. As you can see, the market has violated that structure. But I will not ignore the possibility to see DAX falling and rejecting the inverted edge and shoulders, and then falling into these new lows. At this point, nothing is suggesting that to happen. We have also RSI suggesting more upside momentum for the pair at this point. S&P, I have no study at this point for S&P, but obviously the first thing that occurs me when I search, when I look into this chart, is the possibility to develop into a bat pattern above eventually. Let's wait and see. The market, it's kind of tricky at this point, but it can happen. We can see S&P retesting those highs at 88% retracement, forming the bearish pattern at 99.97, and then let me restart with Dixie. I believe it's a daily time frame that I want to show you. I can use this 12 hours time frame. Okay. What I do expect for gold, for Dixie at this point, I stay quiet. I need to wait for the market to develop at this point. I shared this very sharp pattern last week before or as soon as the market completes the pattern. I shared it among our community, saying, okay, there's a possibility to reject that level. Obviously, we do not expect this strength from the completion point, but sometimes it's happened, and the market filled the targets for this very sharp pattern, retesting those lows. At this point, I need to wait for, first of all, the breakout of this structure. There's also one eventual descending structure now under formation, breaking above this daily resistance. It's a fractal resistance level above 98.45. We may see Dixie pushing higher, eventually retesting that weekly resistance above, a few points above at 98.93. But breaking above that level, I will start to project this crab pattern at 110. So this is the 168 extension from all these bearish swings. So this wave here extended above at 168 extension. So if Dixie decides to break above this descending structure again, that will increase the probability to retest those fractals, and breaking those fractals, I believe the market will trade higher, squeezing it into the 100 territory. But I published also the possibility for the eventual one eventual bullish bat pattern below. And let me try to change these colors just to, and we need to search obviously for the 88% retracement from all this swing, and that will complete the bullish bat pattern around 96.20. I can see also a retest of the fractal monthly and weekly fractal support 95.84. So, but obviously we need to wipe those fractals for that to happen and to start to project the pattern. Both of the patterns, we need to wait for the price to break above in order to project the pattern above, and we need to wait for the price to break below to project patterns below. At this point, we have the shark was printed at those levels. We need to wait for the price to develop from here, and no clear price behavior. Now let's go into cable. published before the completion point, before the market reached that level. I shared the possibility to form these, it's kind of daily time frame chart. This is the sharp pattern at 224 extension. I was expecting that pattern to be formed at that level. The market has nailed the 224 extension there below. And as soon as the market touches the 224 extension, it has formed these inverted edge and shoulders. We are now very close to the default projection for the edge and shoulders pattern printed below. Default targets for the shark pattern, the 50% retracement by default, but obviously on a higher time frame chart, by default, I will search for the 38% retracement. This is synced with previous structure support level, monthly fractal support printed below also. We are now threatening the daily fractal. Breaking above will trigger more upside momentum, and we are now also facing this this trend line resistance from this wedge, the previous wedge formed above, and we are now threatening both the support and resistance trend line. So more bullish momentum for the pair. I believe the market will trade at least 125.38. This is my 38%, and this is the minimum expectation for any harmonic that you find inside the market. The minimum expectation always at 38% retracement.
Nice look.
Then, thank you, Dale. Then we have also pound versus yen. Similar situation on a weekly time frame chart. I see this as a potential inverted cup and handle formation. Usually those will happen, or those will perform better on higher time frame charts. So I will not be surprised to see this orthodox bullish crab pattern nailing, or not nailing because the market actually has violated that level, but it has traded a few points below, testing that close price from October. But I will not be surprised to see again at least a 38% retracement from those lows. 138.06 previous weekly fractal resistance there. So there's a small fractal there. At that point, that fractal was considered as the weekly resistance, and now the 38% retracement for the eventual pullback at those levels, that will put the price trading at 137.79. Basically, what I want to show you is cable versus Australian dollar on a daily. And two patterns that I want to show you here, and this one has already been printed at that point. First of all, the one printed below. This was also shared among our community before the completion point at 168 extension. We expected the pattern to be formed. The pattern, the price has nailed that price level, that Fibonacci level, in that it has bounced, immediately searching for the targets at 38 and the 50% retracement later. And as published also before that happens, so before the price violates this structure, this descending channel, I shared the chart, sharing the possibility for the price to find some pressure, previous structure daily fractal resistance, and previous structure support, and the 168 extension from this swing low. So basically what we have here is a bearish shark pattern printed at 168 extension there, which has provided some shorts there, but the market has also extended a few points above, and this is also the 88% retracement. This is the 88% retracement from these highs to the most recent weekly support. So this is the bat pattern at gray, We have this gray bat pattern at 88% retracement. Actually, that was the pattern that I published for the Forex Analytics community. The 88% retracement below a retest, let's say a retest of the weekly fractal. And the market has already found support. If we go into a lower time frame, it's a clear picture there. So if we go with the price is already has already found some support at the default target. So the market has fallen from the 88% retracement, and it has found support at 38% retracement, the default target. I will not be surprised to see the market retesting the 4 hours fractal, the previous 4 hours fractal resistance. This fractal needs to be adjusted, obviously, at these previous structure highs, and we have obviously the daily, the 4 hours support printed below now. But well, at this point, that's what I want to share with you without ignoring the possibility to form not this bat pattern. Actually, this is not a bat pattern. This can be the alt bat pattern at 113 extension synced or at confluence with one shark pattern at 224 extension. So basically, if the market tries to squeeze higher, eventually we will see 185.36, 185.11, 113 extension, and the 224 extension at confluence there. And both of the patterns may also suggest bearish momentum or a bearish pullback for the pair. At the same point, we have also pound versus kiwi. We are finishing, Dale, because I know we have an interview with a metal specialist today. Both pound versus New Zealand, a nice rebound from the pattern or around the pattern completion point. This was the cipher pattern. I shared that also among our community. The price is already trading the 50% retracement above the default 38% retracement target zone. I will not ignore the bat pattern at 88% retracement at 198.23. And I think that completes my view for pound related pairs. Let me just finish with this simple and clear chart, or at least not so complicated as my other studies there. So I see this was the third drive, the 3 drives pattern. We shared the possibility for a breakout of this structure before that happens, also for our community. I believe at this point, the 200% extension, and this is, let me try to point this. This is also, I see it as a potential
head and shoulders.
Head and shoulders. And the default projection for the head and shoulders synced or at confluence or kind of a relationship with the weekly fractal support. This was printed at 88.91, 89, 50% retracement from all that structure that you were measuring a few moments ago or earlier, Dale. So this is the monthly fractal support printed last March at 84.72. So we have a monthly fractal support. We have the resistance fractal resistance, and then the projection for the default projection for the edge and shoulders, putting or sending the price at 88.91. So I will keep that in mind for euro versus cable, and that finishes my introduction for today. Thank you very much, Dale.
You're welcome, Andre. Thanks very much. Great looks.
Thank you.
Appreciate you. Okay, Dan, welcome back. I'm going to promote you to being a panelist. Probably haven't had a promotion in a while. unless you promote yourself. And then we're going to make sure that your mic is working. What happened here? Attendees, I thought I did that. More. Promote to panelists. I don't know why it's not letting me. Oh. See if you're up there. What's in the chat? Yeah, for some reason, it's not letting me promote you to a panelist, Dan. Wonder if I did this. Promote to panelist. I really don't know what's happening, why it's not letting me promote. Andre, are you still showing stuff? Okay.
I'm still here. I don't know if you need.
Oh, yeah. I'm okay. I'm having a hard time today promoting Dan to be a panelist. See if he's.
Then let me try it.
I know, and Steve's not there.
I
Normally
can't
it's automatic. I click more, promote to panelists, and
let me see. What is his name?
Dan Popescu. See if he's saying anything to me on.
Promote to, okay.
Panelist.
To panelists. I'm not sure if it has worked. No.
Yeah, it's not working. I apologize, Dan. It's 2 days in a row we've had some technical issues with the interviews. All right, well, I don't know how to resolve it.
It won't let me. I'm not sure if Dan can.
Well, we can't promote them to panelists or anything. So there's really nothing to do that we could do.
Allow him to speak, but
I already clicked that, nothing happens.
Nothing happens. I will suggest then to log out and log in again if
yeah, if you could hear me.
I'm not sure if you
Let's see
can
if you
hear.
can chat. Okay. All right, well, I have to reschedule, Dan. All right, that's going to be a wrap for Turnaround Tuesday. I don't know what's happening here with Zoom the last couple days. It bumped Victor out yesterday, and now I can't bring Dan on. So let's see. Call Steve. No, he's on vacation. Okay. All right, everyone, that's going to be a wrap. I'm going to end the meeting. Good luck the rest of the day. See everyone tomorrow.